Today, how the marginal buyer controls all prices. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian and New Zealand flavour. And today I want to replay a show that Joe Wilkes and I recorded last year. It was actually the second post that we filmed back in November 2018 when Joe still had hair. And this followed our first post, What We Can Learn from the UK. Now, look at this post, don't look at the kitchen, but look at what we said, because I think you'll agree Joe was extremely prophetic.
Hello Martin, how are you today?
Very good. Good to have you with us again. And of course, you've got a unique perspective because one, you're in New Zealand, two, you've got extensive experience in the property real estate sector, and you've been watching the market from an economics background. So you're perfectly placed to give us some thoughts on what's happening in New Zealand.
Yeah, well, I hope to provide a bit of an insight beyond maybe what people are being told in the media and fed by the press. So yes, hopefully we can provide some data and some understanding about the real estate industry and market to our New Zealand readership.
And I think there's also some interesting cross-pollination insofar that some of the events in New Zealand are resonating in Australia and vice versa. So I think it'll be a mutually beneficial conversation. I guess one interesting place to start would be to think about the impact of foreign buyers in the New Zealand market, because of course they have been a very significant factor. In Australia, they're disappearing. Not sure what's happening in New Zealand. So what's the story on foreign buyers over there?
Yeah, well, foreign buyers has been a very big part of the market over the last 6 or 7 years. The New Zealand market is, I suppose, much smaller than the Australian market, and really you've got a number of major centres that govern the economy. Each market performs quite differently, but the foreign buyer has been something that has influenced the market to quite a massive degree, even to the extent that it became a policy under which the Labour government have got themselves elected now. So if you look at what's happened over the last several years in New Zealand, you've had quite a sharp population rise, and with that, there's been a lot of foreign direct investments, some from immigration, people coming in and buying houses, but also there's been a lot of purchasing done by people who aren't in the country through various investment vehicles. Lots of seminars on come and buy a property in New Zealand, get some fresh air, and it's probably no different to Sydney in that respect. The foreign buyer ban came into effect 3 weeks ago, 23rd of October. It's taken a year for the policy to go through Parliament. They had I don't know how to describe it. They had a bit of a lag, as with everything. Government policy goes through, gets written, and then there's a date set for this is when it's going to come into force. So a lot of people have probably benefited from the rush that we've seen of foreign money into the market trying to beat this ban. And the statistics are all over the shop. There don't seem to be any firm government statistics. Talk about 3% of buyers being foreigners was something that came from the previous national government. The influence, however, I think is a lot greater than that. I mean, if you only have to look at Auckland, where the population now is 25% Chinese, to say, well, if it was only 3% per annum, and that's only of properties that are available to be purchased, then actually that population rise in quite a short space of time would suggest that those numbers are maybe not quite correct. Official stats, and this is since the knowledge that the foreign buyer was likely to get passed at legislation, say that, well, in Auckland, in the second quarter, this is the June quarter, there were 6.2% of purchasers were foreign buyers. There are parts of Auckland and central suburbs in particular where that number as a percentage of houses that have been sold is actually up at around 20%. So the influence is probably a lot bigger than has been stated by the press. the policy when it went through Parliament, though it's probably the most controversial policy that New Zealand's seen. Lots of I'm not going to say people with vested interest, but people of the property owning class heavily fighting against it. And the Labour government, they promised it to the electorate, along with New Zealand First. So obviously managed to push through the bill.
So can I just ask you? So the bill basically is now in, and it basically says people who are not resident in New Zealand can't buy property. Is that basically what it says?
It's not entirely. It's not the whole thing. The foreign buyer can still buy new build properties, but only new builds in developments where there are 20 properties or more. So, unlike Australia, where they've banned them from buying standalone houses, I think that's the case over there. Here, it's sorry, they haven't banned them from buying standalone houses in Australia. Here, they have. They've pretty much banned that, purchase of a second-hand property, and if it is a new build, it's been a big development.
So effectively, can't buy existing property, which, by the way, is sort of what's sort of happening here as well. They can still buy into a construction if it's a large construction. Is that what you're saying of new builds?
Pretty much, and the argument behind that was that the government wanted to encourage building because we've got a housing crisis, and again, in our post the other day, the housing crisis is actually a debt bubble. It's not a housing crisis, but the policy has been to still try and encourage the larger scale foreign direct investment.
So, do we know what the mix of purchases before the ban came in between existing and new? Is there any data?
No, we don't. There's no solid data on anything. And to be fair, the data from the last 9 years has largely been swept under the carpet. Right. I don't think anybody really wanted to record it, but eventually the population looked at things and said, well, my kids who are in their 20s and early 30s can't afford to buy a house. let's put this out in the public.
So I guess then the question is, a lot of the new building, I suspect, will be in and around Auckland. So are we going to see still focus of foreign buyers then coming into the Auckland market, into those high-rise developments that are still running?
It's difficult to say. A lot of, in my opinion, I mentioned it the other day, a lot of the foreign investment for building houses has come from much smaller scale developments where you've had parcels of land sold off to individuals who've built one or two houses, right. And that has been a far bigger proportion of the new build developments than maybe the bigger scale developments that you're talking about.
Okay, so I guess the hypothesis could be then that if they're going to continue, they'll have to go to higher rise, bigger developments rather than the small lots and plots.
Yeah, we'll see. I mean, the house, and if you look at the stats and the suggestion of a recent 20% purchasing rate in central Auckland, that is going to be largely the high-rise apartments that people buy as a bulk hold in the middle of a city, on the hope of capital gains. The challenge I think that we've seen in New Zealand is that we've gone through a credit expansion at the same time that China's gone through its biggest credit expansion in history. Private debt now at 300% of GDP. I think Charlie Munger mentioned it recently in a news article beginning of October, where he was interviewed and gave really big warning signs about great admiration for the Chinese and the way that they work and their work ethic, but also quite focused on there has been, for a number of years, there's been quite a get rich quick mentality and speculation, and he said, "I've got no time for gamblers." That has seemed to be what people have been betting on, and I think New Zealand and Australia are probably similar in that respect.
So it's been the expectation of future capital growth. Now, so if you put this into the context then of the broader market, right, that's going to significantly change the dynamics going ahead, isn't it?
Yeah, well, I'd like to sort of go back to my experiences in the UK and talk for a minute about the concept of the marginal buyer. Mm-hmm. The marginal buyer is a buyer who has more money than anyone else and therefore sets the price. Now, they don't necessarily have to buy the first home that they buy, so the first home that they look at, to set a marginal price high for somebody else who's trying to compete with them. If you go around the auctions, you know, and I've been watching the auctions over the last 12 months. You will find that, you know, at some point somebody goes to a point, they're the winning bid, they're the highest offer, and they're the people that that get the house. Now, over the last few years, speculation in the market and just the weight of foreign money at auction houses and at sealed bids and at tender situations has meant that sometimes that marginal buyer has just been able to go in and completely wipe out the local market who are relying on earnings and savings and jobs within New Zealand. Now, my experience of this in the UK was that I worked in a market outside London, which was a nice commuter belt town, very well, I said pretty affluent area, and our marginal buyers were the city bankers, the city lawyers. And they were able to set the price for pretty much anything. A junior city lawyer was earning more money than a local doctor. And from 2000 all the way through to 2008, and even, you know, at the end of 2007, the bonuses in the city were so big for bankers and lawyers that they set the price on most of the purchases. I'm not going to say we didn't sell some houses to teachers or to doctors, but those purchases weren't made on income. They were made because there'd been some family money behind them, or they had another chance to compete. But the prevalence of the marginal buyer was that these people were able to outbid everybody locally. So the local market had to move out of our commuter belt town into the surrounding villages and towns, which is not ideal when you think, you know, you want the stability of community where people are in one area, their kids go to the same school, and actually when they've grown up, those children can hopefully stay around an area so that the grandparents can support the family, and you know, I think that's a good thing for society. Now, 2008, at the end of 2008, major banking crisis has occurred. We lost our marginal buyer in Hertfordshire because the lawyers and the bankers weren't earning any bonuses. They couldn't sell the houses in London. And for a couple of years, it was back to local buyers buying houses and trading with each other on normal incomes rather than these high incomes.
Okay, that's interesting. Yeah, and I guess the impact then is that effectively you're saying that even a relatively small shift in the mix of buyers can have a significant impact on the rest of the market.
It can be enormous. If you look at the foreign buyer, and I'm going to sort of paint a picture of what the foreign buyer can do. Mr. Johnny Foreigner, I'm Mr. Johnny Foreigner in New Zealand. I'm an Englishman. I come in and I go to Remuera in the middle of Auckland, lovely suburb, and I've got some money and I go and buy a house for $4 million. Now, I can do that because I've come from somewhere else. You know, if I've saved the money, brilliant. If I borrowed it from a Chinese bank, then that's slightly different. But what I've done is I've set the bar. Now I may be competing with other marginal buyers. I might be competing with other Johnny Foreigners, but I'm also competing with locals who have natural aspirations to go and move up, get family homes, and try and buy a house. Now, what people forget is that once that person who has taken my $4 million, he's all of a sudden very, very wealthy by New Zealand standards, and he's wealthy across the rest of the country. And what I think we've seen is in the last few years that $4 million has then gone and bought a house in Wanaka for $1 million. It's bought a house in the Hawke's Bay for $1 million with a large parcel of land, and the other $2 million has been used to go and buy 2 or 3 investment properties for a retirement income. Now, if Johnny Foreigner isn't there, then the $4 million doesn't exist, and therefore the subsequent values that, because I had $4 million, I didn't mind spending 200 grand more in the Hawke's Bay or 200 grand more in Wanaka than the local market could support. So as a result, those people that I'm now buying from, they don't have the same income either, or they don't have the same asset price. So when you think about how concentrated the purchasing has been in central Auckland, and if the stats say 20% recently of sales, you take away a large portion of that, because I do believe that the actual monitoring of the foreign buyer, how it's done, are they going to be able to cover all companies that are purchasing? Are they going to be able to cover all the people who are purchasing because the daughter's a student in Auckland and they bought her a flat or a house, and they may plan to come over here themselves later. No, I don't think they're going to be able to do that entirely, but it does already send a message that, okay, well, it's going to be regulated, it's going to be looked at, and I think that the government will learn from the next year or so about the people that are getting through the loopholes. So its impact could be quite enormous, and I don't think anybody's really taken on board that without that cash injection, you've got me, Johnny Foreigner, coming in $4 million and buying a house. You're then really relying on a New Zealander possibly putting 2 million down. Do they have that 2 million if they don't have their own Johnny Foreigner to buy their house? Borrowing 2 million. So the banks as a result could be under an enormous amount of pressure. I think that's one of the reasons that we're seeing all of the major lending banks now have reduced rates in the last week below 4%. They must be very, very concerned about the removal of all that liquidity from the market.
Right. So it's a really interesting comment. So what you're really saying is that the second order and third order impacts of that initial purchase, as it sort of fed through the system, lifted effectively all the boats in the harbour.
It lifted everything, and it lifted everything late.
Yeah, right. And the reverse is also true. You take the plug out, as it were, and the whole market then begins to subside as a result.
Yeah, so taking the plug is a bit of an interesting analogy, but yeah, it's if you look at historically patterns that happen in property are that the major centres go up first. They rise to the point that they're no longer affordable to a local market or to even the foreigners. They look at it and start questioning, is this sense?
Yeah.
And there has been a tapering of in particular Chinese direct investment over the last couple of years. And I'll be honest with you, the strength of the New Zealand dollar probably hasn't encouraged people from Europe to come to New Zealand and make that lifestyle move, because I look at the pound, which was 2.4 dollars to the pound in 2016 and hovering now around 2, but has been as low as 1.6. There's just no, the life benefit from moving so far away from the rest of the planet does make it less attractive with a high New Zealand dollar, which is still high by historic standards.
And I suppose if you take that argument a bit further, you could also argue that property investors are potentially also, more generally, are also potentially part of that lifting the prices higher, right? Same effect, effectively, because if they are able to buy, they can drive the prices up.
Yeah, well, that's where the banks and the growth in credit, which we'll talk about, I'm sure, at some point, Martin, the banks have allowed it. And, all you have to look at is marginal buyer. If I'm an investor, I can go and borrow $700,000 on interest only at the same, at a 4.5% rate, which a first-time buyer who probably wants to repay their mortgage, they're looking at $532,000 over a 30-year term. So the marginal buyer in the investment perspective, they have so much more firepower because they're not necessarily thinking about paying the debt back.
Sure.
An owner-occupier, you'd like to think if you're buying a house at 40 that you've got the bloody thing paid for by the time you're 70.
It's a novel idea, isn't it, of borrowing without really a great intention to repay the debt. That really changes the equation completely.
Well, it's been encouraged, and we've seen the expansion of I guess the household debt burden in Australia and New Zealand from it.
No, absolutely. Let me turn the conversation to a little bit of a different perspective then. I'm listening to your conversation about New Zealand with high amounts of construction, significant boom in the property sector, early signs of things beginning to turn. And I'm sort of thinking, sounds a bit like Ireland. What's your perspective? How close do you think Ireland and New Zealand are in terms of the sort of the cycle and the issues?
I think there's lots and lots of similarities, Martin, and I'd like to do a little bit of statistical work for you to be able to go and demonstrate some of the that have happened there during the 2000s and since, and maybe what we've been seeing in New Zealand, which you think back to Ireland in 2006, 2007, and the government were lauding things over the economy that produced this wonderful miracle Celtic tiger. Everything was going wonderfully well. The similarities could be quite relevant. But if you're okay with me doing a little bit more homework on that, and then we've got something to post to our audience next time.
Yeah, no, okay. We'll talk about that in more detail.
Yeah, well, I think we'll try and keep this one short. The foreign buyer, the marginal buyer, the removal of the marginal buyer means that you are left without a lot of liquidity that would otherwise facilitate an awful lot of transactions. Just to give people an immediate picture on it, and before we go, auction clearance rates have in New Zealand been between 45, 50%, 55% over the last few years. A lot of competition at auctions, a lot of competitions at deadlines and tenders. From the end of last year, when the Labour government got in, and this is not a Labour issue, this is a credit issue again. I'm not going to get political on this. The auction clearance rates have dropped, first of all, into the high 30%, and they've been tracking there for most of the year. Barfoot & Thompson provides some wonderful statistics if people want to go and look in and investigate them. I actually quite like Barfoot & Thompson because they're very transparent about what they do, what they take on, what they sell, and if you use your head around their analysis, around their provision of numbers, you can work out quite a lot. The auction clearance rates over the last 3 weeks have fallen into the 20%. The last 2 weeks auction clearance rates have been around 26%. There are a lot of houses at auction that aren't getting any bids at all, and for I guess an on the ground perspective, I had a friend of mine attend an auction at the Bays auction in Auckland yesterday, where 3 of 22 properties were sold. That's a 13.6% clearance rate. So the removal of the marginal buyer, I don't know. Apparently, there were only 3% of them.
And I guess the other thing about clearance rates, it tells you half the story, but also the absolute transaction volumes, right? Which is the thing that people actually forget, right? But I suspect the transaction volumes are also dropping as well.
We will find out very shortly. The REINZ published data yesterday to suggest that October transactions were higher than last October's, and reasonably so, sort of 17-18%. The data, however, includes the 1st to 23rd of October. I've spoken to a number of conveyancers over here who said that there were enormous numbers of people wanting to get contracts exchanged, so that they could confirm their purchase before the 23rd of October. So that's very much a wait and watch, Martin. I think we'll see a different picture when the REINZ release their figures next month.
So this is a real-time situation, right? Because effectively the legislation's just, the curtain's just fallen, as it were. So the next couple of months will be very significant. But I suspect from what you're saying, you would expect to see continued weakness in the market.
I can't say anything other than that at the moment. I'll watch, and we will observe it together.
So there you are. It's pretty remarkable to see how Joe's experience from the UK of what happens when the marginal buyer was removed from the Hertfordshire housing market after the banking crisis now echoes this year's drop-off in volumes of sales in Auckland, a numerical reality that we've covered with data in our recent DFA post. It appears Joe was right last year. The marginal buyer can have a massive impact. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.